feeling up to it. So, but we are back today. Slew of earnings. I tried to put in a number of trades, and the only thing I ended up doing is I did nothing. Actually, full disclosure, I fell asleep at like 3:15 and missed any chance of putting stuff in. Hey, it's what happens, man. You know, you get over 50, and sometimes you just need that afternoon power nap, and I just needed one. So I kind of missed the boat on a lot of things. But what I did do after hours yesterday was I bought some Google. Here it is. I bought just 100 shares. I'm in at 99.08, currently trading at 97.85, right? Not looking too good. So what I'm going to do today is I'm probably going to be looking at selling some calls against my stock, right? Kind of bring the basis down. The thing is I don't know which ones I'm going to do right now. So I'm 100 shares long on GOOGs. And, it's down out of the gate. So at this point, I'm probably looking at possibly selling anything 100 or less. I mean, you figure these 100 calls out in November are probably going to be around $5, maybe $5-6. So I'm going to be looking at possibly the hundreds. Depending on whether or not volatility comes in, I may actually even go right at the money on these, and then look for it to kind of go up or at least stabilize at this point and kind of get into a dead trade. And then at that point, I would have locked in a profit and then be able to go on my merry way. I mean, let's face it, it wasn't really the smartest thing to do was buy the stock yesterday. I don't know, it went under 100 and I just kind of said, you know what? I mean, I had alerts set at 100 on GOOG. It hit 100 and it's one of those things where it's like, you know what? I was going to go in. What the hell is the difference? I'm in at 99 and change or whatever it is. What it was, 99.08. I was like, it's 97. I'm already down $100. It sucks, but what are you going to do? It is what it is. And so now I got a management. And the way I'm going to do it is I'm going to probably sell calls. Now, I originally was thinking of, maybe doing like the 2-day options here. Try and maybe sneak a little premium out of this short term. It's really, really going to depend on how these open. Right. So it's really going to depend on how they open, on whether or not what I'm going to do. So that's how I'm expecting to manage it. So I'm either going to go to the ones expiring in 2 days here. All right, you can see this is the 2-day weekly. This expires on Friday. And probably do like either a 100 or maybe even a 99. Something pretty close to the money. Because really at this point, all I'm looking to do is I'm looking to reduce my basis, possibly lessen the blow if I'm wrong, give myself an opportunity where if it does kind of keep going down, I could actually even roll these out. Maybe if we get another leg down here on the open, I can roll these down out into November. So that's why I was kind of leaning on going toward the weeklies here in GOOGs. If you look at the earnings were not good, right? It was pretty much a disappointment. Not much of a surprise, though. Really, everything's been disappointing, so I don't know why it's such a surprise. But big surprises both on earnings and on revenue. Shocker, right? People just aren't spending money. I've even noticed it on YouTube. When you're on YouTube, I got the ad version of YouTube. I don't know if anyone else has noticed it, but I guess the level of advertising, and what I mean by the level of advertising, it seems to be cheapening. And what I mean is that it seems to be smaller little shitbag outfits advertising, and it's mostly like, I don't know, I mostly get like solicit, maybe because I'm in the trading bit, or I trade and I put videos up. It's mostly from scumbags selling trading services and algorithms and trading services. You know, all these scumbags who are actually trying to teach people or supposedly teach people, and try and like sell them on the dream. You know, meanwhile they're sitting in their fucking apartment. You know, not even doing what they're teaching people that they say they do. So that's kind of what I see, and I kind of get why things are down. So anyway, there's that. So I'm going to manage that with Screw Tube. Microsoft looks a little interesting here to me, just from a trade point of view. Look, I get it. The earnings here were not bad. I mean, the earnings here were actually pretty good. I believe they did guide downward, but I believe that what really is hitting Microsoft right now is Google's weakness. I think there's a little bit of sympathy going on, even though the earnings were pretty good. I mean, the earnings were actually, I mean, if you look at the numbers, they were actually pretty good. I mean, I don't really understand. Their cloud business grew as Azure, right? That grew, I think, like 22%. So again, I don't know. I think it's more sympathy. Excuse me. I think it's more sympathy than anything else with Google being down, and although every tech is down with Google, Microsoft, and Amazon, they all kind of carrying lower. But I kind of like Microsoft here as an after earnings trade. Now, the problem with Microsoft, as usual, is the margins suck. And so you're going to be putting a box on what you can actually do. But I think if you're going to do anything in Microsoft, I think now is as good a time as any. And go out to January. Don't play this short ball game. You know, we're going to probably be in a bit of a, chop house between now and the end of the year, and probably more so between now and when the new band of crooks get inaugurated into Congress, right? Because you're going to have a new crew of crooks, and I don't care who you voted for, Democrat or, look, Democrats basically stand for everything the Republicans don't, and the Republicans stand for everything that pisses people off for the most part, it seems. Like, so, right, no matter who you elect, they all suck. None of them are going to do anything that's going to help any of us, right? Other than probably make our lives a little more miserable, whatever it is. So anyway, you have that, and I just don't see really much catalyst between now and January. So I think you could actually go out to January, even March here, and sell some puts in Microsoft and play a little long ball. If you did something like at around a 20 or even a 30 delta, the 30 delta right now is about a 215. That's going to change when this opens because it's obviously down $15. But to me, a 215 put looks pretty juicy here, and they're not going to be priced. The 215 puts are going to have some juice in them today. Let's face it. They're going to be up in value. You could probably sell a 215 put, probably maybe close to $10, especially if you get a little bit of a volatility increase here in Microsoft. I'm out in March, and hey, to me that's not a bad trade. And then if you really want to get, you have a margin problem, then do the spread and do one pretty wide, right? If you do a fairly wide, let's do it about $15, let's say even $10, you're going to get a nice little payout for a trade that's going to put you into Microsoft at a pretty reasonable price. I mean, let's face it. So if you get assigned at 215, your cost basis is about 212. I don't know. That seems like a pretty good deal to me. Now, if you have margin, that's always kind of the case. But if you have margin and your account's a little bigger, I think a put ratio is like right in the wheelhouse here, especially around 215. I mentioned 215. I particularly like the 220, 215 put ratio. Again, the margin sucks, and I get it, but Microsoft is what it is. It's one of those stocks where the margin is never your friend. And why is that? I don't really can't figure it out, to be honest. You would think something as liquid as this would have better margin rates, but I guess it's one of those things where you're paying for stability. I don't know. I can't figure it out. Honestly, I don't know. I try to put an answer to it. I don't know what the fuck why. I mean, it makes no sense to me. You would think, but then on the other hand, you have stocks that have that are total shitbag stocks that literally have no margin requirements at all. They're basically praying people to do things with them, and meanwhile, they wonder why people default on shit. I don't get it. I don't know. Maybe I don't know enough. Never really took the time to understand the whole why something has better margin rates than others, but. Needless to say, there's kind of a trade to me that if you have a little capital, you can get synthetically long Microsoft at to me, a pretty reasonable price. You got a little bit of time you have a lot of time on your hands, 142 days. You're going to get some theta in there, and then you're going to play a little long ball, and then really look for this thing to kind of start recovering after the new year. So anyway, I'm just throwing that out there on Microsoft. I kind of like that trade there, and I kind of like even adding to a little bit of stock. If you have some gash, I'm not telling you to go bet the farm, but hey, even 10 share lot, which is probably what I'm going to do in my IRA, is just maybe like go and like plow into about 10 shares or so. Add to the coffers a little bit here. Even know that knowing that maybe there even might be a little bit more downside. So there you have it. That's kind of what I like there in Microsoft. You had a bunch of others to me that really didn't even. There really was no there at all. Like Halliburton really kind of like landed right in the zone, so there really was nothing to do there because I talked about that one as well. And that's about it. And so now what we have on the docket for tomorrow, let's just take a look at tomorrow's earnings trades. Let's see. Well, actually, tonight we got Meta, Ford, Teladoc. That one should be interesting. And that really looks like that about sums it up. Let me just throw this up just so everybody can see. Yeah, and this is my Discord. Go join my Discord. You don't have to join the Discord. We don't do much in there. It's pretty damn quiet. So we got Meta, Ford, Teladoc looks interesting. We'll take a look at those. These other ones, not really interested there. And then tomorrow morning, Shopify, McDonald's, Caterpillar, Southwest Airlines, Mastercharge, Merck, Cameco, Altria, Comcast, and Credit Suisse. So let's take a look at some of those. We'll start off. We had Boeing this morning. That one kind of turned out flat. Didn't do anything there. So let's take a look at Facebook or Meta. It's still Facebook. I'm always going to put Facebook up, but it's Meta. I'm fucking retarded, right? Zuckerberg, jackass. Could have thought a million other things to call this thing. Calling it Meta is a joke. All right, so right away we're going to be out into the November expiry on here. Absolute excellent IV rank here at 96. That's really, really high. Expected move of $21. So that's going to bring us all the way down to almost one standard deviation on each side. So we'll let's look at the one standard deviation strangle, or just about the one standard deviation strangle, which brings us down to 110. And the 165, you can see it right inside those blue lines. So that means we're in a little inside the one standard deviation, which normally is the wheelhouse for these. This is actually a really, really nice trade, given that I know the margin's a little high at $1,300, but we're bringing in $470. Now, this is going to be completely different. Well, it's going to be close. It should be about the same because the calls will come down, the puts will go up, and it should be about the same for something like this. But anyway, 74% probability of profit. I like this trade. If I could get this to work right. There you go. I like this trade, and that's the 110 165 strangle. It's going to run you $1,300 of buying power. You're going to bring in $470 worth of credit. And I would say when this opens, the pop on this is probably going to be about 70. It's probably going to drop about 4%, given that Meta's down about $5. Not much, but even still, this is a really well-constructed trade, in my opinion. You have literally really a decent amount of, let me just get rid of the analysis tab, really decent amount of downside protection all the way to 105. And then upside all the way to 170, 167 and change. You do the math, right? It's 169.30, right? Whatever. 170, just make it easier. You have a pretty nice range in there, and you're well outside the expected move. So if you get like an anomaly hit where, it gets whacked down to one side or gets, the chances of it rallying are probably slim to none anymore, right? Especially with this, I don't expect them to crush it on earnings. I mean, everything's pointing to disappointing earnings. So I think if maybe they're not as shitty as expected, things should actually be okay. But really, with this trade, you don't really give a flip. As long as it lands in that zone, and you got a pretty nice breadth there. So that to me is the trade to do. Is the 165, 110. And again, if you don't have the buying power, just come out here and cover it. Again, it's not going to be as attractive of a trade, but it will still be able to allow you to get in the trade. And this is still a pretty well-constructed trade, even being an iron condor. You're still at almost 70% pop probability of profit. So you're still about still at a pretty high probability of profit. Down here, 69%. You have a pretty decent theta number, especially for an iron condor up in the fours. And you're only using $370 of capital, and you can bring in, and I would try to do this one for $130. Always try to squeeze a little bit out. It's always worth it. Better in your pocket than in the trader's pocket down on the floor. Just another well-constructed trade for earnings to me. So there's kind of like step two. So step one to me would obviously be the strangle. I think that's where your biggest bang for your buck is going to be, and your biggest chance for profitability. But nonetheless, if you don't have the buying power, this is a very well-constructed, easy to do trade. You could probably do this in just about any account you want, and you could probably even do it in an IRA. I mean, I could probably do it. I know I could do it in my IRA because it's completely risk defined. So there's Meta, and so those are the things that I would do. I probably avoid being directional in here because I mean, you could maybe sell puts, but seeing what's kind of going on out there in the tech space right now. Anyway, so there's my take on Meta. Let's go into a Ford. There's not going to be much here to do in Ford. Although the volatility is a bit high, I'm not really seeing much you can do here in Ford. Premiums are just not there. And then, outside of doing like a straight up covered call would be really what the play would be here for me, because the stock is cheap, either a covered call or something synthetic of that nature. I don't really see any real play in Ford. So probably going to do a hard pass on that. And then full disclosure, I own a bunch of Ford stock anyway. So what I would probably do, or most likely will do, would sell some upside calls against my stock, just to kind of hedge myself. Teladoc. Now, this one has just gotten eviscerated. They have absolutely just blown this thing to pieces. This was in its glory days, this was the Cathie Wood. This stock was like Cathie Wood's bread and butter, and literally, I think, if it wasn't for this stock, literally we wouldn't even know who Cathie Wood was. I mean, this one kind of put her on the map. She caught this all right, all the way up, but she was dumb enough and ignorant enough and stubborn enough to keep doubling down. I think she's finally gone out of it. But this thing in its glory days was $300. It's $26. I mean, oh my God. I mean, right? Holy moly. What a abomination. And it's sad because the technology is there, right? I mean, to me, it's something that, you would think the technology would grow. Again, it's not anything more than like reality and rubber hit the road. But anyway, given that, this is going to be a fun stock to trade because it's $26. I don't really know what you can really do. I don't know if you're really going to sell calls in here. The thing has just gotten blown to pieces as it is. To me, I think if you're going to do anything, just do a put ratio. I kind of like the 25-24 put ratio. I know it's kind of tight. You're not going to really use that much buying power, but you don't really have much to do in here. It's kind of tough. It's kind of a tough little stock, given that you don't really have much room to do anything, and you're really not getting paid to sell calls at all, in my opinion. Maybe you do something, something like this may not even be bad. Maybe and sell the upside 28. So you're kind of selling the ratio. You're doing a 25-24, and then you're selling some upside calls. And you can see your delta's negative in this. I don't know. I don't know really what to do. As much as I kind of want to do something in here, and more I kind of start putting stuff on the screen here. I'm kind of I don't know. It's really going to be worthwhile. Margins don't look that great, to be quite frank. I'm going to be frank. I'm going to be Joe. To be frank, the margins don't really look that great here at all. In fact, yeah, I mean, the margins kind of look like squat. And if I did let's see if I did the full expected move. The full expected move would going to bring me down like a 20.5. There's no open interest there. That brings me down to a 20. So the 20.33 strangle for $1.80, $500 worth of buying power. I don't know. Maybe if I wanted to kind of punish myself a little bit. What the frig what is going on with this platform? Everything's messed up. Look at this. What is this? What the hell is this? What in the frick is that? All right. Anyway, yeah, I don't know. I didn't know. I don't know. I mean, so yeah, I mean maybe 71% pop. You're well outside the expected move here with the 20.33. Just not real happy with those strikes. And so that's Teladoc. And that's really it for tomorrow. From what I see, I don't really think I'm going to get into anything else. Service now, that's never really. Let's look at Shop. Decent volatility in Shopify, $28. Let's see, expected move strangle. Really not a lot of juice, but it is $28. I don't know, the 24. I mean, it's bringing me to 37. I mean, that's actually not a really bad trade at all. I mean, margins are great. You're only going to use $300 worth of buying power. I actually like this trade. So it's the Shopify. What is going on with this? What is going on here? Why is this all messed up? What is the story? Why is this doing this? Look at this. Frig. Way to go, Tasty Trade or Tasty Works. Every day now, every time I've been on here, it's something new with this. Something else blows up or something else doesn't work. Software to the cheapest bidder. They suck anymore. I'm glad I didn't move all my money over to this stuff. I really am, honestly. I mean, I'm actually getting really disappointed. I mean, they're really not coming out. For somebody who's supposed to be on the cutting edge of technology, they have not come out with any cutting edge of anything lately. Last year and a half or 2 years, they've sucked. So anyway, I don't want to sit there and bitch and moan at them, but anyway, that's what I'm looking at is the 24, possibly the 24.37 strangle. I kind of like that and use $300 worth of buying power. And that's how I would sit there. It's going to be really tough to do a risk-defined trade in here because the margins are so low, right? So again, you'll see that even if I did a risk-defined trade, let's just for argument's sake do a 25, a 20, and you'll see that a risk-defined trade is actually going to look much, much worse. And then again, for argument's sake, I'm doing a 35, 40, right? So for a completely risk-defined trade, see how nuts this is? And that's why I think it's really important for you folks when you're trading options, especially when you're trading options, that you don't listen to these jackasses out there just telling you to buy iron condors or sell iron condors because chances are, just doing the iron condor because it's risk defined is actually a worse trade than doing the naked strangle. The naked strangle only runs me $260 worth of buying power, right? For a completely risk-defined trade, which sounds completely nuts, it actually costs me more money in buying power. Doesn't make any sense. They're paying you from the margin rates and the way the margin is on this stock. They're literally enticing you to do the naked strangle. And look, it's not as risky as everyone. Oh my God. It's not. It's basically the same trade. Your downside is zero. Your upside, do you really think Shopify is going to go to $100 tomorrow on earnings? I doubt it. Be lucky if it hits 30. So where's the risk? And if it does, well, guess what? Maybe you got to buy some stock. Or maybe you got to sell this at a loss. You would still have to sell it at a loss anyway. So anyway, needless to say, I just find that I hope you can appreciate that example is that, and I wish I could show it on the curve, but the curve sucks today. Let me see if I can log out and log back in. Maybe that's what it is. But anyway, there you have it on Shopify. I'm going to do that one again, but I'm going to kill this and go back in and see if that cleans things up. But I like that Shopify strangle. And so that's why it's really important when you do these earnings trades that you always start out with the strangle. And then wrap your trade around that. Because that's going to give you what the margins are. It's going to give you what the market's priced in as far as risk, right? Because obviously the higher the margins, the more risk. The lower the margins, the brokerage firms are telling you that the risk is not that high. And look, they're always going to err on the least riskiest to them, the brokerage firms. I'm not trying to stick up for them, but they're going to do what's always less risky for them. All right, let's go back to shop. And I really like that trade. Let's see if it comes back. It was the 33, correct? Actually, no, it wasn't I think it was the 24. Yeah, it was the 24. Was it the 24? Or was it the 23? I think it was the 23. For some reason, it's priced different. Maybe because I restarted. Unbelievable. Anyway, even the 24.33, which is the one I like anyway, given here. Let's go to the curve. There we go. So the 24.33, 67% pop. I think it was the 23. It was the 23 because it was a 70% pop. And I kind of like this. Again, you're using $200, it's almost $300 worth of buying power. Your max profit is 209. Look, you're not going to make that. Decent theta number in there, and I kind of like this trade. So it's going to be really rough for you to do a risk-defined trade in Shopify, given where the margin rates are. All right, so that comes out in there tomorrow morning. So there's the trade that I like, the 23.33 strangle. Let's look at Mickey D's. This is never usually a good one to trade for earnings. Even though volatility seems to be relatively high, the implied volatility kind of sucks. Margins always blow in this. Never really much of an expected move. $10. Let's do this. Yeah, look at the margins in here, just awful. You're not gonna really be doing anything in McDonald's. $3,000 worth of buying power. No. I mean, you got to do something risk defined in here. And, this really on the surface is not a very bad trade, though. Even though this thing usually sucks for earnings, you're in a pretty good, I think you're in a pretty good landing zone for McDonald's. The 235 to 240, 270, 275, Iron Condor, you're literally right at the one standard deviation move in here. So you are, like, you can see that blue line, that's one standard deviation. That's usually the wheelhouse, right? To be in here between 1 and 2 standard deeds. And that is going to give you the biggest and highest probability of profit. And actually to have a theta up in the 4s here is pretty good. And that's because volatility is pretty elevated in here, for Mickey D's. Mickey D's is not really usually a high IV stock in general. So for it to be in the 50s is pretty interesting. Let's look at CAT. So that's what you're going to do at McDonald's. You really have nothing else. Caterpillar. This is another one that normally is not really great to trade on earnings. Because usually the margins blow. Again, I'm just selling a put and they want $2,400. So that sucks. So if I did, they literally inside the one standard deviation, it's actually 175. Bring me in one. There's about the one standard deviation strangle. Again, on the surface and structurally, and structurally, a pretty good trade. Good data number. I don't know if you want to use $2,000 to buying power, $1,900. To me, that's just it's not my wheelhouse. I wouldn't want to put that much on the line, especially for this stock. So you're going to be forced into the Iron Condor. And there you have it. And on the surface, I mean, look, this one's not really that bad either. You're only bringing $115 worth of credit. You're using 385 buying power, 70% pop. You're well outside the expected move. You're in that wheelhouse of that one standard deviation. So again, if you're looking for an earnings trade, this one's going to be, this one's going to be okay. I don't know if I'd be willing to do it. To me, I don't know. It's not really that exciting, but you never know. By the time 3:30 comes around, maybe itching to do something. And, sometimes I will throw on a trade like this, just as kind of like, yeah, let me see what I can get. Because you're not going to get killed in this either way. This is not something you're going to get murdered in. And, most likely you could probably flip this one out. If it comes within the expected move tomorrow, the thing about this trade, if this comes within the expected move tomorrow, and we really only get maybe a $5 move either way in both directions, you're probably going to make a couple of bucks in this. You're probably going to make 20, 30, maybe 40 bucks in this pretty quick. And you'd probably be able to flip it out right away, first thing tomorrow morning when the market opens. I mean, that's the one thing that's nice about that. I wouldn't really, hang in there for this to kind of chew away that 115 because That could burn you because all we need to do is get a little downturn in the market here and things get soft. Volatility increases, and then guess what? Your premium in this is going to explode. So, don't be an idiot. But to me, this one's kind of interesting because it's one you could flip out for a few bucks pretty quick, I think, in the morning. And so anyway, there's Caterpillar, the 175, 170, 215, 220, Iron Condor. If you want to get a little more aggressive, you could widen these to 10 a pop. Now, it's going to do a couple of things. It's going to bring in a little bit more money. It's not really going to change your pop, but it's going to increase your potential max profit. But it's also going to increase your margin, literally going to almost more than double it. But if you want to get a little more aggressive, this is kind of option 2 on Caterpillar. If you want to get more aggressive and you believe that there's going to be a pretty significant volatility collapse here, you could actually get yourself a little bit more theta burn on that IV collapse for tomorrow. Either one, depending on your risk tolerance and how much buying power you want to use, either one of those is a pretty good play to me for tomorrow. Again, because I think Caterpillar is one of those ones where you'll be able to flip out of either one of these tomorrow with a profit. I mean, let's face it, with a profit. I don't know if it's going to be a big one, but I think you could flip out of this one pretty quick for a pretty quick profit one day. One day you make 40 or 50 bucks off $300-400. You do the percentages. There's guys selling programs, training programs out there on how to do that bullshit, for thousands of dollars. So, and you can see it's all here for free, and you don't have to pay for squat. And let's look at Merck. Merck's been on kind of a tear lately. It really has. I mean, I'll even pull the chart up. It's actually shocked the living shit out of me because I'm long some Merck, and I'm also like short calls against stock that are I'm getting pressed on. I think I'm short like 85s or 90. I think they're 90s. I think they're 90 calls. And they suck right now, right? Because I'm kind of getting beat up on those. I'm doing okay on the stock, but it's my calls, and thank God they're out in like January. So, but anyway, needless to say, Merck has been on quite a tear. And let's look at the IV. Volatility in here sucks. So I don't really know if there's going to be much of a trade in here. For me, if anything, I'm a contrarian. I kind of like shorting this into earnings. Believing it's going to get a bit of a pullback. There's not really a lot of volatility to sell, so I don't even know what the hell you would do in here besides maybe do some kind of you're not going to be able to do anything from a margin perspective. It's going to suck. No, there's no play here. I'm not gonna play that game. And that is kind of it. Let's see, MasterCharge. I'm not a big fan of MA, honestly. This one never really is very good to trade for earnings, given that margins always blow to hell in here. I mean, look, let's just for argument's sake, we'll do the one standard deviation strangle. And look, I'm selling a put and I'm already up to 3,000 in margin, so it's like, right? So $3,300 in margin to do the expected move strangle, or basically the one standard deviation, a little inside. And $500, they want $3,300. Now, structurally, this trade looks phenomenal. If you look at it structurally, if you kind of like don't look at the buying power here, right? You kind of squiggle this out, right? If you were to just block this out and not even look at that, great theta number here, right? In the 30s, almost, 30 theta is pretty nice. That's a nice burn on, on your premium to sell. 72% probability of profit, 87% probability to make 50% of max profit. Structurally, outside of the buying power requirements, this is a really, really nice trade. And so again, it all has to go back to what is your risk tolerance? How much money are you willing to, or how much money are you willing to forfeit for that trade? And I say forfeit because you're not forfeiting it in a real sense, but you're forfeiting the opportunity to use that capital for other things. It really depends on what that kind of is in place. So now, I mean, look, if you have the margin in here, this is, looking at this here, this is one of the probably best trades on the board that I've put up. Outside of the buying power requirements. That theta number really has me thinking that I have to do something in here. So let's look at this from let's look at it from more retail point of view. And I'm going to do a 10 wide. Let's see if we do it a 10 wide iron condor in here. And, full disclosure too, this stock usually sucks ass for earnings. It usually does. Because generally it never has this high of an IV rank because it's a financial and they don't normally run at high IV. Usually they're very low. So doing the 10 wide, and this is okay. This means okay. It's not what you other thing. Means okay. In my book anyway, I don't know. It's just what I do. Instead of pointing, I just went like this. But, again, now we've actually reduced the buying power here. Now we're down to 750. We're bringing 250 in. That's a decent amount of premium to bring in on this trade using 750. And that theta number in the eights for an iron condor, although 10 wide, that is a nice number. And all the other schematics for this look good. Probably a profit, almost 70%. Probability to make 50% of max profit. 76%. This to me is a really nice trade, and I'm probably going to be looking to put it, even though historically this stock usually sucks for earnings. I think this is actually, again, and you're in that landing zone, that one standard deviation. Where's my pen tool? Again, that one standard deviation. I need my toolbar. Let's let those fade out. That one standard deviation here, right? We're basically kind of in that zone here, in that one standard deviation, two standard deviation zone. So there's a good trade for you in Master Charge. I know it's MasterCard. It's Master Charge. It's always been Master Charge. They just took the charge out because it had negative intentions. That's why they changed it from Master Charge to MasterCard, because when you charge stuff, that's bad, even though people know they are, right? That's why they changed it. All right, so that's kind of it. And these others like Altria, I'm not really going to get into that. That's more of a dividend play. And then tomorrow, we kind of have a lot more tomorrow afternoon, which we'll go over in the morning tomorrow. Intel, Amazon, Pinterest, couple other T-Mobile, I'm not really. And then Friday, ExxonMobil and whatnot. So there you go. I thought I kind of went over a lot of earning trades here for you. We got Meta. We talked about Teladoc. We didn't really go over Ford because that's a crap. Shopify had a really good one, a strangle in there. Caterpillar, McDonald's. I didn't go over Southwest. Let's do Southwest Airline. Airlines have been pretty strong lately. And honestly, just looking at the option chain here, God, what is going on with this platform? Look at it. It's a mess. All right. So anyway, just looking at the option chain in general, though, on Southwest, I'm not a fan. Not a lot of open interest. I'm a little disappointed, and so I'm going to pass. So there you have it. I thought I went over quite a good number of stocks for tomorrow and tonight for earnings. As far as like the overall markets are concerned, I'm going to be sitting on my hands for the most part. I'm going to be watching the NASDAQ is going to be the one index that I'm going to watch today because, it is kind of got pounded yesterday with GOOGs and all the big NASDAQ stocks kind of taking a hit, Microsoft. So I'm going to be watching that for a possible bounce. And then again, we're going to be doing a little trade management with Google, possibly selling some calls today against that stock. But as far as everything else, the markets just look like we're just in a churn shop. And I think it's going to be that way for the next few months. All right, so that's it. So again, please subscribe to my Rumble. Go to my Rumble. If you go to Rumble, just go to rumble.com and just type in Maple Leaf NJ. I come up. Please subscribe over there. You know, I'm kind of pushing it because I want to get off FuckTube. I can't stand it. Only because I've been on there for so long. I literally got no monetization whatsoever. And I've been on Rumble for like literally a month. And I already have monetized videos. You know, I'm making a couple of pennies, and I don't really want the money, so to speak. But it's nice to get compensated for putting in time doing this shit. Honestly, it really is a little nice reward. You know, even though I'm probably never going to withdraw the money anyway. Because actually I have money on TikTok. I have like $200 worth of whatever in their creator fund, and I don't want to take it out and touch it because I don't want to give them my information. So anyway, I don't even use that either. But anyway, go over to Rumble, subscribe over there, because I am looking to like stream directly there and make that my primary platform. Is what it is. Take it however you want. You know, oh, I'm a crazy conservative. No, I'm just, you know, YouTube is trash, and YouTube is they censor people, and it's just not good. Censorship is not good on both sides. Right? Free speech is free speech. If you don't agree with something, then don't listen to it. That's why there's 200 channels on TV. You can always change it. Actually, it's this now. It's used to, I can tell how old I am. I'm changing the channel with the dial. So anyway, please subscribe over there. You know, I really appreciate it. And then get me off this thing. You know, and Twitter's going to be interesting once Elon takes it over, because possibly, you know, maybe they open it up and make it a better platform. The reason it's not a bigger platform than what it is quite shocking to me. And a big part of the reason is because they censor people. So anyway, have a good one. Good luck today in your earnings trades, and I'll be back tomorrow.